perfect storm is hitting Australian super. Here are the three forces causing a $1 trillion shift. Number one, trust in financial institutions is at an all-time low. The Banking Royal Commission and recent asset reports have made people question the system. If you think SMSFs are just for wealthy old men, you're about 10 years out of date. Here's who actually is setting them up in 2025. Your super fund doesn't want you to know this stat. 115 Australians fired their super fund yesterday. That's 115 today and 115 tomorrow. When it comes to your super, are you operating on control or on hope? Here's the difference. Welcome to SMSF Insider, where we help busy professionals to gain financial independence using an SMSF. Hi, I'm Troy, founder of Blue Chip SMSF Services. And over the last 20 years, I've helped thousands of Aussies manage the complexities of self-managed super funds. And in this podcast, I'll answer your questions, break down the myths, so you can take charge of your financial freedom. Let's get into it. G'day guys, and welcome to this edition of SMSF Insider. Last year, 42,000 Australians did something that shocked the financial industry, and that is they fired their super funds. Not because they were unhappy with their returns, not because of fees, but because they realised something. They had more options than they thought. Last year, 41,980 Australians set up their own self-managed super funds. That's up 27% from the year prior, and it's not slowing down. In fact, while you've been watching this video, another Australian just made the decision to explore whether an SMSF is right for them. Hi, I'm Troy, and today I'm going to show you why this trend is happening, who's making the switch, and what's driving this massive shift in Australian superannuation. Because what we're witnessing right now is the great unbundling of Australian superannuation, and it's one of the biggest financial trends of the decade. Important disclaimer, before we dive in, I need to be clear about something. This is general information only about trends in Australian superannuation, and it's not financial advice, and it's not a recommendation that you should or shouldn't set up an SMSF. Whether an SMSF is right for you depends on your personal circumstances, your age, your super balance, your investment knowledge, your goals, and many other factors. You should speak with a licensed financial advisor before making any investment decisions about your super. Blue Chip SMSF is not licensed to provide financial advice. We are an SMSF establishment service for people who've already made a decision with professional advice that an SMSF is right for them. Okay, good. Let's look at the numbers. The numbers don't lie. Your super fund doesn't want you to know this stat. 115 Australians fired their super fund yesterday. That's 115 today and 115 tomorrow. Last year, 41,980 new SMSFs were established, a 27% increase on the year prior. The SMSF sector is now worth $1 trillion. That's nearly 25% of all Australian superannuation. So if you've been thinking about whether you have more options for your super, you're not alone. Tens of thousands of Australians are asking the same question. But here's what's really interesting. This isn't slowing down, it's accelerating. The 27% increase from last year is the highest growth rate we've seen in over a decade. And every indicator suggests it's going to keep growing. So what's driving this? Why are tens of thousands of Australians exploring alternatives to traditional super funds? The answer is what I call the great unbundling, the unbundling phenomenon. Here's why your industry fund is like Foxtel in 2025, and why 42,000 Australians are switching to the Netflix of super. 20 years ago, you had one option for TV, a cable package with 200 channels you didn't watch. That's your industry fund, a bundled service someone else controls. Then Netflix, Stan, and Disney Plus come along. They unbundled TV, giving you control. That's what an SMSF does for your super. Just like you don't need Foxtel to watch TV anymore, you now have alternatives to traditional super funds. It's called the Great Unbundling, and it's reshaping the entire industry. A perfect storm is hitting Australian super. Here are the three forces causing a $1 trillion shift. Number one, trust in financial institutions is at an all-time low. The Banking Royal Commission and recent asset reports have made people question the system. Number two, access to information has exploded. You can learn everything you need to know about super from YouTube, podcasts, without paying thousands for advice. Number 3, people want more control in uncertain times. After COVID, inflation, and interest rate hikes, many people don't want to just hand their retirement over and hope for the best. These 3 forces, distrust, information, and a desire for control, are driving this massive trend. Just quickly, guys, if you're a busy professional, fed up with traditional super funds and overwhelmed by the setup of your SMSF, we can help. Book in a call with my team using the link in the show notes, and let's build your future on your terms. Now, back to the episode. If you think SMSFs are just for wealthy old men, you're about 10 years out of date. Here's who actually is setting them up in 2025. The new wave of SMSF owners are 45-year-old business owners buying their commercial premises. They're dual income couples in their 40s who want to invest in assets their industry fund doesn't offer. They're property investors who want to use super for real estate. The average age is dropping. The reasons are diversifying. This is no longer just for the wealthy. It's a mainstream option more Australians are exploring. And that brings us to an important point. Are SMSFs right for everyone? Let me be really clear about something. SMSFs aren't for everyone. They require active engagement. They require responsibility. They require a certain level of super balance to be cost effective, typically at least 200 to 250,000. If you're not ready to be actively involved in your super, or if your balance is below that threshold, a traditional super fund might still be the better choice for you. SMSFs also come with ongoing obligations. Annual audits, tax returns, compliance requirements, investment strategy reviews. So this isn't a decision to make lightly. It's something you need to discuss with a licensed financial advisor who can look at your specific situation and help you determine if it's right for you. But for those who do have the balance, the engagement, and the desire for control, an SMSF can offer flexibility that traditional funds don't. This is the tipping point for SMSFs in Australia. Here's why in 10 years, they'll be as common as mortgages. For 20 years, SMSFs were complex and expensive. But in the last 5 years, the technology got better, the costs came down, and the information became accessible. The barriers have disappeared. We're now at the critical mass moment where the idea is spreading from early adopters to the mainstream. Once people understand they have options for more control, many of them want to explore those options. That's why the growth is accelerating and why this is a trend you can't ignore. When it comes to your super, are you operating on control or on hope? Here's the difference. With a traditional super fund, you have limited control, you hand your money over and hope they do a good job. For some people, that's fine. But for a growing number of Australians who want control, they want to decide where their money is invested, whether that be property, shares, or other assets. They want to choose their investment approach. With control comes responsibility. It's not passive, it's active. The 42,000 Australians who explored this option last year didn't want to just hope. They wanted control and they were willing to do the work to get it. Here's another reason this trend is happening. Asset flexibility. Traditional super funds typically have a limited menu of investments, usually managed funds, ETFs, maybe some direct shares. But if you want to invest in something else, what if you want to buy a commercial property and lease it to your business? What if you want specific exposure to certain asset classes? What if you want to buy a residential investment property? Your industry fund will likely say no because they don't offer those options. But an SMSF, you can invest in a much wider range of assets as long as they meet the sole purpose test and comply with super laws. And that flexibility is attractive to people who want to build wealth in specific ways. The 45-year-old who wants certain investment exposure, the business owner who wants to buy their commercial premises and build equity, the property investor who wants to use their super for real estate. These people can't do what they want in a traditional super fund. So they're exploring alternatives, and that's driving a significant portion of growth. The question you need to ask yourself is, should I at least explore whether this is right for my situation? Don't dismiss it without at least understanding what it is and whether it might suit your circumstances. Now, here's the thing. If you do decide with professional advice that an SMSF is right for you, setting it up correctly matters. A recent ASIC report showed that 62% of SMSF advice failed compliance. And there are some caveats to this data, but I cover that on another episode. But this compliance failure could be because people are either doing it themselves or getting it wrong, or they're using providers who cut corners. At Blue Chip SMSF Services, we've set up thousands of funds. We know every compliance requirement. We know how to structure your fund so it's compliant from day one. We don't use generic trust deeds. We don't use templates. We don't cut corners. We draft your deed properly. We set up your corporate trustee correctly. We register everything with the ATO. We make sure your fund is audit ready from day one. And we do it in 5 days, not 4 weeks, not 8 weeks, 5 days. Because we know that when you've made the decision with professional advice to set up an SMSF, you don't want to wait 2 months to get started. You want to move, you want to act. You want to get your fund set up and start implementing your investment strategy. And that's exactly what we help you do. So here's what I want you to take away from this video. 1, the great unbundling of Australian superannuation is happening right now. 42,000 Australians explored the SMSF option last year, and that number is growing. 2, this isn't just for the wealthy. It's an option that business owners, dual income couples, property investors, and many different types of Australians are considering. 3, we're at a tipping point. In 10 years, SMSFs will likely be a common option that many Australians evaluate as part of their retirement planning. Now remember, this video is about trends and general information only. Whether you should set up an SMSF depends entirely on your personal circumstances, your age, your super balance, your investment knowledge, your goals, and many other factors. Before making any decisions about your super, speak with a licensed financial advisor who can look at your specific situation and give you personal advice. What Blue Chip does is set up the SMSF structure for people who've already decided with professional advice that an SMSF is right for them. If you've had the conversation with your advisor and you're ready to move forward, go to the link in the show notes to contact us. We'll have everything from our side completed in 5 days, and you'll be part of the trend that's reshaping Australian superannuation. If you haven't had that conversation yet, speak with a financial advisor first. Understand your options, make an informed decision. Thanks for watching. I'll see you in the next one. Thanks for tuning in to this episode of SMSF Insider. If you got value from this, make sure you subscribe so you never miss the strategies we share to help you take control of your financial future. Find us on socials at Blue Chip SMSF or book a call with our team to see if we can help you.